as I said, people have choices. There are people who don't own any gold at all and don't own any precious metals, and they were presented with the opportunity to own some, but they rejected it because they trusted the government. You understand? You have to be very clear in economics. What do you want? Security and safety, or do you want an entrepreneurial, free market, capitalistic society? That is the question that people have to answer.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today, we are joined by Dr. Marc Faber, who is the editor and publisher of the Gloom, Boom, and Doom report. How you doing today?
Very well, thank you. Very kind of you to have me on your illustrious program.
Yes, thank you. I was reading on some of your just some of your background, and so you have a PhD in economics, and so you've been studying finance and how money works and economies for like a long time.
Yes, I started to work in 1970 in New York.
Oh wow,
I'm a great grandfather of the investment business.
that's amazing. That's amazing. So I noticed that you also have another name by the name of Dr. Doom. How did you earn that title?
Well, it came up because I had already in the 70s regular writings. I didn't call it at the time the Gloom, Boom, and Doom report, but I wrote every second week a report about stock markets, and I highlighted unusual opportunities that developed in Asia, in particular in emerging economies like the Philippines, when in 1984, the Philippine stock market had a market capitalization of less than $500 million. It was already then a country with over 60 million people. And later, I also wrote about Singapore, Malaysia, Indonesia, and Korea, Taiwan, Hong Kong, and so forth. But by the late 80s, I thought that these Asian markets had become overvalued, in particular the Hong Kong market and the Japanese stock market. So I warned the day before the crash on October 19th, 1987 happened, that the crash would happen. And then by accident, it happened the next day. So in Hong Kong, they started to call me Dr. Doom. But internationally, I was just another stock picker and just fund manager. But then in 1989, I had turned very bearish on the Japanese stock market, and I had made multiple bets that it would drop at least by 50%. And then it happened. I underestimated the decline. It dropped by more than 70%, and over a very long period of time. And so people started to call me Dr. Doom. But actually, to be fair, the original Dr. Doom on Wall Street was not me, but Henry Kaufman. He was the chief economist at Salomon Brothers at the time. And there was also Dr. Dess, that was Al Wojnilauer. So Henry Kaufman and Al Wojnilauer became very bearish, so they called him Dr. Doom and Dr. Dess, because they kept on predicting that interest rates would go up, which they also did in the 1970s. So I'm actually not, I'm not entitled to take the credit for being the original Dr. Doom. but I'm much an older doom than the existing
Yeah.
ones.
Some of these nicknames they float around over time. I mean, you got the Wall Street
Yes,
Whiz Kids.
yes.
Those are I've seen Wall Street Whiz Kid multiple times. So, it's that's a fair assessment. I mean, predicting that the 1987 crash. Well, I mean, you predicted that we're gonna have a crash soon. You had Black Monday. You also predicted what happened, what was going to happen in Japan in the early 90s, and so recently we had an event with Japan with the deleveraging, and there's talk about the carry trade and with the Japanese central bank increasing rates for the first time in a long time. So what's your take on Japan now, and how this impacted like markets everywhere? I think markets were uh, shutting down trading for a little bit, and I mean we saw a huge sell off.
Well, you know, I'm well known for having discovered some markets that were unusually cheap, including commodities in the late 1990s. But I'm also well known for having discovered many markets that were overvalued, and my reputation was then built on being bearish about stocks. The common feature of bubbles is that a lot of money flows into one sector of the market, and that more and more people endorse simple concepts that something always goes up, something is better, and it goes up because it will keep on going up and growing and so forth. And then there are concepts of something is hopeless, and that is when markets bottom out. So in the last few years, the markets haven't done well, except for very few stocks that drove up the indices, the way the indices are looked upon and constructed by market capitalization. You can have essentially one stock that would go up dramatically and be the largest stock by market capitalization. And within the S&P, you could have 499 stocks that actually go down. But the one stock goes up more than the 499 that go down. And so the index keeps on going up. But it's not a reflection of the market anymore. It's the reflection of one stock being particularly strong. And recently we had the Magnificent Seven, the Facebooks of this world, the Amazons, the Metas, the Nvidias, and so forth. And then we have the semiconductors, and the other sectors within the markets haven't performed very well. And at the same time, we had in Japan and other emerging markets, bear markets, in Japan in the currency, but the bull market in stocks. And as the yen went down, more and more people shorted the yen. And as the US dollar was relatively strong, and as the US dollar had a higher deposit yield than the yen, much higher, people borrowed yen and bought dollars. And everything works for a while, but it doesn't work forever. And so these positions became very large, and they have begun to unwind. Now, how much they will unwind, and is the unwinding actually already finished? We don't know. But I'm just saying, when markets become very stretched in one direction, they become vulnerable to the downside. And when markets are very stretched on the downside, in other words, a bear market that has lasted 4 or 5 years, and stocks are truly cheap, they are vulnerable to an upside bounce and a turnaround. So this is happening. I've written a report recently about major turning points in markets, in asset markets. And I think we're in a period of a major turning point at the present time.
Yeah, that makes total sense. So you mentioned the
Thank you. Thank you. I'm not used that people tell me that makes sense, but
that's a compliment in today's society, huh?
yes, yes, thank you.
So yeah, so when you mentioned the strength of the dollar, so right now we have gold near all-time highs measured in dollars, and you have the dollar is still strong. I mean, we haven't seen a whole lot of weakness in the DXY, and it's kind of interesting because usually when you're in a risk-off environment, gold usually sells off. People will sell their gold to pile into stocks and and to get those gains from there because gold is usually just the safe haven asset. So what are you thinking? Why do you think gold is still elevated where it is today? If you have the Magnificent Seven, carrying the markets and the dollar still strong.
Well, my view is that the Magnificent Seven have peaked out. Now, you may have a different view, and many analysts do have a different view. They think that it's a correction, but I think it's more serious, and I can explain later on why. But let's make the assumption that the Magnificent Seven have peaked out, and let's make the assumption that the US dollar is artificially high against many other currencies. As a result of that, the US has large trade deficits. And let's assume that the US dollar is strong, not necessarily because of economic factors, but because of a technical factor which revolves around the US dollar having much higher interest rates than, say, in my home country, Switzerland, where interest rates are next to zero. You understand? Or in Japan, we have on the 10 years Japanese bonds 1% interest. In America, you have, say, close to 4%. Still, it was at 5% a little while ago. But the 4% and the 1% is a 3% yield differential between dollars and yen. And over 10 years makes a lot of difference. So my sense is that the dollar on fundamentals is going to weaken, but maybe not right away. But I think over time it will weaken. And I think that gold is where it is because nothing is safe. Nothing is safe. Yeah. When I grew up, my grandmother always told me, oh, you must save. And when you earn money, you have a salary and you then put 10% of your salary in the bank. That is safe in a state-owned bank. That's safe. But a deposit in a bank nowadays is not safe. So you buy stocks, it's not safe. They can go up, they can go down. Bonds, they can default, and so forth. Inflation can pick up, so bonds can go down. Commodities, they don't have a yield, so you can lose money if suddenly there is an oversupply. So nothing is safe, and I recommend diversification. But the gold price is relatively high because you have to understand the global economy is, say, the size of this glass, okay? We can see it. And then since the 70s, the financial market, which used to be compared to this glass, the financial market used to be the size of this lighter. So the real economy was much bigger than the financial economy. But in the meantime, what has happened is this financial market, my lighter, has grown exponentially. And now the financial market is a multiple of this helmet. I had to have my staff clean my bicycle helmet. Normally, motorcycle helmet is much bigger. But that is now the reality. The global economy is this, and the financial market is this. And the global economy depends on this financial market. And the gold price has gone up, but in my view, it hasn't really gone up the same way this global financial market has gone up. In other words, gold as a percent of all the financial assets is still very, very small. And I think that is the reason gold is kind of supported, because foreigners, central banks of China, India, Russia, and so forth, they do not trust the American government. They think if we keep our money in dollars, the American government can screw us one day or another day by freezing our assets. And the recent presidents of the US and the Treasury and the Federal Reserve are all completely incompetent characters, incompetent. And so the world increasingly relies on other instruments to maintain their reserves in. In other words, more and more precious metals. They also have cryptocurrencies, and they also have alternative to the US dollars.
Mm. Yeah, that's amazing explanation.
But I want to stress one point.
Go ahead.
I've been telling people to own gold for the last 40 years, and I have been buying gold for the 40 years, but it's not 100% safe. If the government idiots, the people like Trudeau, the US president, then the Germans, and Macron, and so forth, all these government class, if they could tell the people, you have to stay home, you have to get an injection against the vaccine. Nobody had a clue what it was about and what the consequences would be. And you have to stay in your apartment. And unless you take the vaccine, you will be fired from employment. If that kind of government continues to be in power, they can tell one day, take all the gold away from the citizens. They can also say one day, we're not going to pay our debts. That's why I'm saying nothing is safe. But there's nothing new in life. Nothing is safe. You can have an accident. I can have an accident. But it's better to take precautions and to have some gold where you live, and some gold outside the US or outside the country of residence and so forth. So you can take precautions.
Mm-hmm. Yeah, it seems like I tell my audience quite a bit that there's risk in everything. There's risk, having money in the banks, risk having money in stocks, cryptos, gold. I mean, obviously in the 30s we had the gold confiscation laws that were passed, and I mean, and even just how you laid out recently and during the pandemic, what governments were doing to people across the world. And so and that's a very, very grim world, where you would see a lot of civil unrest and revolts and civil wars and such. And so that's a world that I don't want to see, Mark. That's a world I wouldn't.
Well,
want to
I'm
see.
lucky. I have a high age already, so I may not see everything.
Yeah.
But as I said, people have choices. There are people who don't own any gold at all and don't own any precious metals, and they were presented with the opportunity to own some, but they rejected it because they trusted the government. And who is the government agency? Is the Federal Reserve that prints the money. So if you decide in life to trust the Federal Reserve and to trust people like Trump and even worse, Biden, and then recently some people wrote they didn't think the government could get worse than with Biden, and now we have a communist that will run America. potentially. I don't think she has a chance to get elected, but you have to see a lot of people, they want to have the government taking care of them and the government having more and more influence on their lives because they are scared to take personal responsibility and they don't want to work and they don't want to be independent, but they want to essentially receive from the government. They're then surprised if the government tells them what to do. You understand? You have to be very clear in economics. What do you want? Security and safety? Or do you want an entrepreneurial, free market, capitalistic society? That is the question that people have to answer. And I can give them a book or recommend a book. I can't give them all a book that I can recommend. This is a book that is worthwhile reading, Capitalism, Socialism, and Democracy by Schumpeter. It's a very important book, and you don't need to read everything because it's heavy reading. It's understandable, but heavy reading. But an easier read is, say, Milton Friedman's, let's see here, Capitalism and Freedom. That's the one that people need to read. Capitalism is a system where people are free to choose. They can choose whether they want to have a business or be an employee and so forth, and where they want to live and what kind of occupation they want to have. The opposite of the spectrum is essentially a government that tells you everything, but also takes care of you. They send you a check every month, but they tell you you have to be at 8 o'clock in the morning there, and you have to close the window then. And in the extreme case of the extreme communism China had, you could wear a blue dress or a brown dress, and that's it. Nothing else was available. So this is something people have to decide upon. For me, the decision was very clear. I want to be free in life. Doesn't matter whether you're very rich or not so rich, but you can be free and independent. But you have to look after yourself. You understand? When my motorcycle breaks down, then I have to fix it or get someone to fix it. But I prefer to do everything myself. The worst is to have the government touch anything, because whatever the government has touched is surrounded by massive, and I repeat, massive corruption. And of course, in America, the public has been brainwashed into thinking that the government is honest. This is the greatest fallacy I've seen in my life, that the US citizens believe that the government actually does something for the ordinary people. They all couldn't care less about ordinary people. They care about their limousines, their mistresses, boyfriends, and pedophiles, whatever it is, but they don't care about the typical American. Whenever I hear politicians give a speech of how they care about people, it's the best joke, and it's being repeated again and again.
Yes, I wholeheartedly agree with you. I wholeheartedly agree with you on that. So obviously we can't mitigate risk and everything. There's always going to be risk involved. We may have to go back to the days where they used to bury their gold in the backyard. So the U.S. national debt just surpassed 35 trillion. It's past 35 trillion. I mean, then we have the unfunded liabilities somewhere
Good you mentioning that, because this is the crucial issue. The unfunded liabilities are so large. The US government has no option but to print money. There they would have to tax people at 100%, and they wouldn't be able to fund the unfunded liabilities.
Yeah. Yeah, looking at historical tax rates in America, I think the highest it's been was 90% during, I think it was World War II or something like that. Right now, we got presidential candidates talking about tax cuts. We got government; they're not balancing the budget. Um, they want to spend more money, right? They don't want to cut entitlements, and they still want to fund military excessively as well. And so, it seems like printing is going to be the only. I feel like we're at the point of no return. Like it's like I have no hope that the national debt will be decreased or even paid off at any point. And so I'm wondering, what does this look like for me? I have young children. You mentioned you're a great grandfather. So what do you think this could look like? Down the line, like what happens?
Well, this has happened many times, and there are basically three solutions. You could essentially reduce government spending, but please show me a politician that would get elected if he went to the electorate and said to the retirees, well, I'm very sorry, the conditions of our economy is such that we need to cut your benefits, especially to the veterans, the military veterans, or the police force, or the firefighters, all these people. We cut your benefits. Do you think anyone who tells the public that they will cut social benefits would get elected? Never in a million years. Never in a million years. The other thing is they could go and say, well, the conditions, the financial condition of our country is such, we need to increase taxation. So you have to tighten your belts. We all increase your taxation. No politician would ever get elected on that basis. None. The third and easiest way that every government throughout history, from the times of Babylon 3000 BC up to today, has taken is to print money. In other words, to diminish in former times the gold and silver content of coins to essentially nothing under the Roman Empire, or issue paper or borrowed money and then failed to repay the borrowed money and so forth and so on. But normally it led to some inflationary pressures and hyperinflation. This is the result. And I want to make one point very clear here, because most people don't understand that. Of course, the cause of inflation is the central bank increasing the quantity of money. But the increase in the quantity of money becomes a necessity if the government spends more than it collects in taxation. Now, we could have two islands. You, Darren, you own island B, and I own island A. In your island is a paradise. Nobody pays tax. Yes. In my island, whatever the government spends, people have to pay tax. Okay? In my island, let us assume that in both countries, yours and mine, we have a constant money supply growth at, say, 3% per annum or whatnot. In your country, where people don't pay tax, for sure, if we have the same government expenditures, you will get inflation, because the deficits in your country will be such that they will necessitate an increase in the quantity of money. In my country, we pay tax. The money conditions are essentially stable. And we will have lower inflation. So inflation is for sure a tax, and it is a very unfair tax because it hits the lower and lower middle classes the hardest. And let me explain you why. Let's say I'm a rich guy and I have stock portfolios, real estate, and so forth. I actually benefit from inflation because inflation will increase the prices of the assets that I already own. Whereas the people that don't own any assets, they suffer from price increases of food and necessities of life, and they don't have assets to participate in the increase in the quantity of money. So they are being hurt the hardest. I mean, as an investor, we have to see this very clearly. Why do we have inflation? Who runs the country? Largely well-to-do people. And of course, there are social programs, and the government has increased the social payments to everybody exponentially over the last 50 years. In the 19th century, we didn't have social security. That's why the country was growing so rapidly. But now we have subventions for everything. Everything is subsidized. And companies get loans and soft, and some companies don't need to pay tax and this and that. I mean, it's an unfair system. It's no longer a free market. And the central bank keeps on printing money. So, in my view, I would hold assets that cannot be multiplied dramatically. I mean, say precious metals. You own physical silver, gold, platinum. You can increase the supply somewhat, but not dramatically. Whereas I assure you, you and I and every complete idiot, including the central bankers, they can print money. It's very easy, especially nowadays. It's all electronic. In former times, you had to print banknotes and distribute the banknotes. That nowadays is no longer required.
Yeah. So with you mentioned platinum. So what's your outlook on platinum? We've seen gold and silver rise. Platinum tends to be attributed to more industrial with vehicles and such, and so. But it is significantly cheaper compared to where it was a couple of years ago. Same thing with palladium and rhodium and such. So why do you mention platinum?
Well, for the same reason you just alluded to, the price of platinum is extremely low. And in any scenario, I think that platinum could easily be squeezed. To squeeze the gold market is not so easy, but to squeeze the platinum market would be easy, especially since South Africa and Russia are not exactly the greatest friends of the US at the present time. So I think that this is an accident sort of waiting to happen, that the price of platinum explodes on the upside. But I don't buy precious metals for an upside explosion, although I think the prices will trend higher. I buy precious metals because I think they're safer than other assets. And B, if I look at long-term cycles, sometimes we call them Kondratyevs, but we could also call them price cycles, or we could call them interest rate cycles or inflation cycles. They last a long time. And the interest rate cycle, the downward wave between 1981, interest rates peaked out in 81, and August 2020, which was the low, this is completed. From here onwards, we have an upward cycle inflation and interest rates, that will last maybe 20, 30, 40 years. Who knows? But it's an upcycle. And of course, like in the 70s, the upcycle is interrupted by rising waves, falling waves, rising waves, falling waves, but an uptrend. And so my view is that maybe for the next 6 months to 1 year, inflationary pressures will diminish. But it's not that prices come down meaningfully. They just don't go up as much as, say, between 2020 and 2022. Because now the price level, that nobody is disputing, the price level in the world, by and large, is 20 to 30% higher than it was in 2019 when COVID began. Now, complete morons with some education, they will tell you it's because of Putin and because of shortages and COVID. This is all nonsense. It's all because of money printing, all of it.
Yeah. So, natural resources, I just wanted to, as we get ready to wrap up, what's your outlook on, mining? I mean, we got like rare earths, oil, uranium, you got these things that are needed to make the world, energy makes the world go round, right? And so, just kind of wondering what's your outlook on those types of commodities moving forward, especially with governments needing to I mean, here in America, we haven't updated our water systems in like over 100 years. Our grids are outdated and such. And so, so I'm just kind of wondering what's your outlook there?
Well, if I look at long-term commodity cycles and interest rate cycles, I think we reached a low in 2020. Oil was actually negative. And since then, we're in an uptrend. And some people say, well, no, we'll have electricity and all these alternate sources of energy and green energy will require much more usage of oil and coal. Coal stocks have been the best performers in the last 2 years, aside from Nvidia, of course. But I think it's an opportunity to accumulate some commodities. But you have to understand, for an individual, it's not so easy to buy 100 tons of wheat. I mean, he would need to have a silo to store the wheat, or he has to operate in the futures market, which then requires constant rollovers and is costly because of the forward rates and so forth. But I would own some commodity stocks relative to the overall market, or the Nasdaq, are at the lowest that they have ever been. They've never been this cheap. And if you look at the composition of the S&P, say the FANG stocks and the Magnificent Seven are, say, 35% of the S&P. Energy is maybe 3-4%. That's it. So I would buy some energy. But my preference is the physical. Because in a decline of asset markets, the financial assets would be very vulnerable. And two, when financial assets decline in value, all the paper loses value, some more than others, but it would be seldom that stocks, energy stocks go up and the rest, everything is down. You understand? So I prefer owning physical gold, silver, and platinum. But in a bull market for precious metals, the mining stocks outperform massively, not a little, massively. But I have to say that based on my relative optimistic outlook for precious metals at the present time, which is largely based, if I look at the picture of Kamala Harris, of Biden, of the German idiots, Baerbock, Scholz, and Habeck, then I think the gold price should be at 1 million and not at 2,400 thereabouts. So this is my hedge against bad government. Not bad, actually, horrendous governments. Horrendous. Future historians will write how Western democracies destroyed themselves by electing completely incompetent civil servants.
Yeah. Wow. Yeah, that's really good. So hedge yourself with physical, and yeah, that's a good note to leave on.
But I own some gold shares, mining stocks, and so forth. And but up to now, the performance, given that the gold price is at essentially close to a high, the performance has been very lousy. If you go back 10 years, they haven't done anything. The gold shares, partly because of the management of these companies.
Mm-hmm. Yeah, that's true. That is true. Well, Marc, I thank you for coming on. I'm going to link to your report, the Gloom, Boom, Doom report, in the description. You all be sure to go check that out. Support Dr. Marc's work. He's very, very, very educated and very savvy in just these financial markets. And so I want to thank you for coming on and everything. And yeah, appreciate your time.
Well, I wish you and your readership and the listeners and viewers all the best. I think we have to be realistic and modest. We don't know how the world will look like in 10 years' time. I mean, Ludwig von Mises, he wrote, the more the government is planning, the less we can forecast, because the governments intervene into free markets. So to predict the market is maybe possible, I doubt it. But once the government intervenes into the free market, it's impossible to predict.
Yeah.
Okay, thank you very much.
Thank you, Marc.